A lot of people think of back to school as a time to buy textbooks, pens, notebooks, but as Scott McElmurray with the Bank of Little Rock Mortgage is here to tell you, it's also a great time to buy a house. Back to school is in full swing. While it may seem like money flying out the door, could be flying back in with the right investments. Here to get you thinking outside the box, explain home ownership as an investment, President and CEO of Bank of Little Rock Mortgage, Scott McElmurray. And so you're talking about here, your son, for example, is going away to college here soon in about a year, right?
Right, correct.
So instead of maybe putting them in a dorm or renting a place, there's a different way you could go.
Well, there's a way you can think about it this way, right? So you're spending a lot, as any parent who sent their child to college knows, cost of student housing is enormous, right? So you're talking about these college towns, Fayetteville, Jonesboro, Searcy, Conway. Well, they're doing really well from the standpoint of college scholarships, but then also the lottery. The student populations are growing, and so is the need for housing. And so if you're able to purchase a home, you can essentially let your child live there, possibly rent it to one or two other people. Their home basically is paid for. They have no student housing because their other kids are paying for it.
Right.
And you've got an investment that you can lease after they're done to someone else and make money potentially, or sell it, because you typically will see some appreciation more so in, say, a college town because of that dynamic of all the student growth and
you're always going to have that constant constant influx of students there. So you're talking about maybe if you buy a $150,000 house per se, you're spending $800, $900 a month, and
that's the difference, right? You're not looking at it as a place for yourself to live. You're looking at it as an investment. So those are the key things to look for, right? You want to look at what is the going rent in the area and making sure you're not buying too much house. But you also want to look at some factors, everything that goes into cash flow. What's the payment? So your credit score, your loan to value, the interest rate you can get, all those things that factor into, okay, what's that monthly payment, and can you lease it out for obviously more than that monthly payment?
That's going to be a second home, though. That's an investment, though. It's going to be a
higher interest rate, right? Require a little bit more down. Now, one interesting thing is, let's say you have a child that is planning on staying in the college town once they graduate. They can co-sign, or you can co-sign with them to buy their primary residence, which gets them back into lower financing, lower interest rates, lower down payments, those kind of things.
Good deal. And the important thing is, if they're not going to stay there, is finding, if you're to keep the house as an investment, to find the right renters.
Right, and that's the flip side, right? Because you get the wrong renter in there, and all of a sudden you've got a major expense. And so those are things you have to consider: maintenance, those kind of things. That's a landlord now, as opposed to someone who's, keeping the house up themselves while they're living there.
Well, any other tips really quickly? We got about a couple more seconds. Anything else? Any other tips going on?
I mean, certainly you want to look into, again, the cash flow. It's investment, right? It's not. So you would definitely want to look at market rates. And then, when you have a freshman, they probably have to live in the dorm anyway. So you may want to look at it even more after you write those checks for the first year.
And make sure they get very, very mature roommates.
Absolutely.
Very studious.
Because we all know 18-year-old boys are really mature, right?
Yep. I was one a long time ago. I think you might have been one.
I think I was there one time too.
Well, thank you very much.
Long time ago.
We appreciate it as always.